Hi everyone, and welcome to the latest episode of Knight Frank's Property Perspective. We've had a little break, but look forward to getting some more episodes out to you. We've got a really interesting set of issues to discuss today, talking all things housing, development, planning frameworks, and how developers are responding to the various initiatives that government is putting in place. I'm joined for today's discussion by Mark Blinco, our National Head of Project Management here at Knight Frank. How are you going, Mark?
Very good. Thank you for having me.
Really, I know this is an area where you've done a lot of work, got a lot of experience working with developers, working at different stages, and so, some really rich experience with which to offer. To set the scene, though, I suppose we're seeing state government respond within the context of big ambitions from the federal government. We've become familiar with the National Housing Accord, targeting a big delivery, 1.2 million houses. I believe that was sort of set in mid-2024. From media reporting, it doesn't feel like we're on track, but certainly there seems to be a lot of effort going on within Sydney to try and improve delivery. There's a few headwinds along the way, which we'll discuss, but maybe we'll just start with the big picture in terms of your sense of where are we at along the journey in terms of that New South Wales government. We can talk about other states as well in that response, and what sort of levers are being pulled to encourage new supply.
Yep, sure. Look, New South Wales first, I suppose. Yes, it's probably a little bit behind where I think most levels of government thought it would be. It is progressively getting better. There are things in New South Wales, for example, Housing Delivery Authority, that is now a different approval pathway that people can go through as a developer for certain metrics you've got to meet, state significant development, those sorts of things. There are different hurdles for metro areas versus, say, regional areas. So there is a push to try and do that. And New South Wales is also a bit unique in releasing their TOD orientated development. So that's transport orientated development around transport hubs. So there was, 36 or 38 of those identified by the government sort of the last 12 to 24 months, which are going through the process. They are slowly getting approved. I think there's about half a dozen to date that have been approved on the North Shore of Sydney, which is sort of getting headwinds with construction costs. So it's probably not the same as when they came up with the inceptional idea at the time. But obviously they are sort of starting to trickle through now, which is great. Other states are fairly similar. Construction costs are sort of affecting those quite a bit as well. So they don't have the sort of same planning mechanisms. They're sort of going more the traditional land development type things, sort of horizontal estates. But certainly in Sydney, there's a real push for high-rise, mid-rise resi, which we don't really see sort of drying up or dwindling, even with construction costs and
feels like there's a big push.
Interest rates and all those sorts of things. So
you've said that there's a few levers there, so why don't we take each of them in turn? So you mentioned rezoning, accelerated pathways, and of course the TOD program. So if we think about rezoning first, it feels like governments are leaning on that, and in some cases, encouraging transition from industrial to residential use to encourage supply. I mean, how do you think that is going? Is that effective? I mean, how are developers managing the potential transition on the ground?
It is effective. It's effective in certain pockets. So, for example, a lot of the councils aren't really on side necessarily with what the state government is planning to do and how they're going about it and delivering it. So, we've looked at projects where we've gone, say, through a traditional council pathway. It's quite difficult, still quite robust. They're sort of more thinking longer term for council locally. They're not thinking short to medium term for housing supply, whereas the state government does sort of look at that. So there's often conflict between the state and the local government levels. So there's a bit of, I suppose, expertise to try and navigate that as well. There's other things such as affordable housing. So a lot of developments go through for mid to high-rise resi. You go through the planning process, you get that approved. You can whack on 30% affordable housing. Suddenly, 3 or 4 buildings in a precinct do that. Council aren't particularly happy with that, and they try and sort of almost slow things down for other sites that haven't gone through the processes yet. So it's quite an interesting sort of process to manage and go through that and just sort of see how they sort of play out. There are, products coming out to market that have come out of that cycle, but there's still a lot of people sort of in that sort of front third of that cycle at the moment.
So just unpacking that, so do you mean that an owner of industrial land could, look at the state guidance, state level, and feel that they've got, a right to proceed relatively quickly with the transition, but they're getting then, subsequent to that, they then get pushback. So it's the different layers of government are not aligned.
Yeah, absolutely. So, for example, we're looking at one at the moment out in west, I suppose we'll call it, without sort of going into the suburb. But the state government are very much supportive around it because they're putting through the Parramatta Light Rail, trying to activate precincts. Council have had a lot of the control and power taken out of their own hands, so they're a little bit resistive to that. So a lot of clients are pushing through that state pathway, and obviously the state government has different drivers to local government, and they're very keen to see development and housing built for the community. So it's not a catch-all you can just sort of push through state level. You still got to sort of, I suppose, navigate state and local, and obviously then it's, how quickly can you get your product to market.
And I suppose what are some of the things that developers can do then to manage that second stage of the process, if you like? So thinking if they're at a higher level, there is support for them to proceed with that transition. But what is it that enables them to sort of smooth the path and get the job done in conjunction with local level?
A lot of it's early engagement. So often, even if you are going through the state pathway, don't try and sort of just force that through. Have that consultation piece with local council as well. At the end of the day, state almost sort of let you build it and, yes, housing's done, tick, precinct's done, tick. Council are left to deal with all the other sort of operational issues longer term, garbage collection, traffic management, all those sorts of pieces. So, being really consultative, open to discussions, not sort of just jamming it down sort of council's throat or through state government necessarily. And, that really, I suppose, opens it up to address all the issues as you're going through that planning process, whichever process you go through, state or local. But that consultative piece is probably the key to getting that through.
And is there anything Sydney can learn from other cities? I know pressures are greater to some degree in Sydney in terms of the pressure on land, the residential values are higher, and so, in a sense, it sounds like the state government over the past couple of years has made this a big push, and understandably it sounds like there's a few teething issues to iron out. Is there anything Sydney can learn from Melbourne, for instance, which has had, at an aggregate level, it's had a more successful run of adding housing supply? Yeah,
Sydney's quite unique. We're sort of landlocked on three sides and then waterlogged on the other side, so it's a little bit different to Melbourne. Melbourne's sort of gone more horizontal, whereas Sydney's gone more typically vertical. Each capital city really has its own pressures and problems to deal with. So Melbourne is quite different to Sydney as is, say, to Perth or Brisbane. Brisbane's probably a little bit more simpler again. They're not landlocked like Sydney is. Perth has the boom or bust sort of mining sector that sort of dictates a lot around the housing. They've obviously been a lot cheaper housing traditionally. They've caught up or are catching up. I wouldn't say they've quite caught up, but they are definitely catching up fairly quickly if you look at house prices. But again, WA is quite different in that they then have a mining industry that pulls construction and trade and infrastructure resources away from housing to follow the mines, the oil, the gas, all those sort of other sectors that are over in WA, which we don't have that sort of difference over on the East Coast, probably except for Brisbane. Brisbane, obviously, with the Olympics coming up, they've had a bit of labour shortage issues, like skilled labour to build things. As, stadiums have to be built, all that sort of Olympic infrastructure.
A lot else going on,
has left, I suppose, what you call the traditional property real estate sector a little bit dry labour-wise. So that will be an issue, and that will continue to be an issue going forward too as we get closer to the Olympics in 2032.
So, thinking ahead then, what do you think at both levels of the state? Understandably, the state government's keen to get on with it. Local government has other considerations. Do you think that the policy frameworks need to sort of soften it at the edges a little to be a little bit more flexible, or is it just something developers are going to have to live with and work their feasibility around?
Ideally, yes, they would soften on the edges. In saying that, as a developer, they are after a certain return. They want their product. It's about speed to market, quality to market. So it's a little bit of a different driver for the developers. Policy doesn't hinder or help it, but again, you've got to come back to the consultative piece. If they sort of didn't try put a state layer over a local layer that have differences in them, it would be a lot more simplistic. So, softening would sort of help that. But in saying that, the state government had to roll out housing, so they've just said, hey, we're doing this is it. Sorry, councils.
Yep.
We've consulted you to a degree, but we've got to make it an ultimate decision.
Changing tack, so thinking then about accelerated pathways, which you also mentioned, and clearly the aspiration that's similar in many ways, the aim to cut approval times. Are they speeding up delivery? We're probably at the aggregate level, it doesn't seem like we're seeing a big uptick in new starts, but of course there's other issues as well. Planning is but one of them, but are you seeing that being well received on the ground?
It is well received in saying that if you do go through the HDA or Housing Delivery Authority process, that is quicker. It's not literally 50% quicker. It's probably something like 20, 25% quicker. And again, it is fairly new in the last sort of year or two. So a lot of those are still yet to actually be sort of shovel ready, because by the time you go through the process, you get your CERs, you lodge all your information, you're still looking at 9 to 18 months to get an approval, and then you've got to obviously be shovel ready. And in the meantime, labour's changed, construction costs have changed. There's a lot of other economic factors that have sort of affected it. You're sort of almost guaranteeing you're going to be shovel ready within that time frame. There are some that have actually hit the ground and are in construction at the moment, but over the next sort of probably year to two, the ones that are in the system at the moment will start coming out. Then I think you'll see an acceleration of housing and apartments across Sydney.
Okay, what about accelerated pathways in other states? Is there again? Have they had more experience than Sydney? Again, is there anything we can learn here?
Other states do have alternate pathways. They're still relatively new also. I wouldn't say, for example, Melbourne does it better than Sydney or Sydney does it better than Melbourne. They are just very different markets, very different types of projects that are coming out. Obviously, Melbourne's population has grown a lot more than Sydney's has over, say, the last 5 years. So they have a different housing supply issue. Sydney typically goes vertical, whereas Melbourne typically goes horizontal. So that's a really big difference. So there's a lot of land estates that have been released across sort of the outer ring of Melbourne over the last 4 or 5 years. So that is occurring. There's also a lot of apartments, mainly in the core CBD, whereas Sydney's a little bit different, where we have sort of pockets, all over Sydney that are high-rise. If you look at some of Hurstville, Chatswood, those sorts of areas, even Parramatta, Breakfast Point, where there are apartment booms, I'll call them, which have been built and developed over the years. Melbourne has it in the Docklands area and maybe one or two other pockets. It's not quite the same as Sydney. So it's a very different model how they sort of provide that housing. And, obviously research will say the facts and the figures around, how much Victoria is providing, say, versus New South Wales. I don't know the figures myself off the top of my head, but they would be, probably not that drastically different.
Well, it's probably been a little higher in Victoria. I mean, they've had, as I think the geography plays into that, it's been much easier to do greenfield development, which has been pushed in the west and the north of Melbourne. As you say, Sydney is a bit more hemmed in. It's not to say there isn't. There still is greenfield development going on, southwest, northwest in particular, but it's a little bit harder to achieve the same scale, and so that puts the onus on high density, including close to transport nodes. So there's probably a link here, I suppose, to what's going on with the TOD program. And I think you're right in that Melbourne has achieved more scale and high density toward the western end of the CBD and into Docklands, whereas in Sydney we've got more of that high density in the suburbs, linked to transport. So it's already quite a lot of stock, places like Chatswood, Macquarie Park, Parramatta. But the intent is to do even more, and that's been a real talking point over the past 2 years in terms of the shift of policy. So where are you seeing that now? So where are we now, a couple of years on? Of course, there's been pushback from some councils and others more accepting, but where are you seeing that having an impact in generating more stock?
It definitely is generating more stock across those key hubs in Sydney. So, like you said, Parramatta, Macquarie Park, up sort of north towards Hornsby. There's a lot also in Hurstville. There's still, along that sort of Parramatta River, a lot of development going on. You drive over some of the bridges and, it used to be a park. It's now, 20 stories worth of apartments. The big difference, I think, in New South Wales, say, to Victoria, for example, New South Wales probably spent the best part of the last 10 years building infrastructure. So there's, so many metros, so many tunnels, freeways. I'm not sure what we're up to now, M9, M10 and M11. Don't know where we're up to on those. Victoria probably hasn't done it to the same extent. So we've probably spent the best part of the last 5 or 10 years in New South Wales building infrastructure to be ready to build, I suppose, the residential side and the property side. Victoria's probably less so. They have built some infrastructure. They've a couple of ring roads and they've connected a few as well. So they are probably in the cycle a little bit behind Sydney, but in saying that, they could rapidly catch up over the next 5 to 10 years as these developments start happening.
Well, I'd argue they probably haven't needed to pursue a high-density model in the same way because they've had more success with greenfield in the outer suburbs and they've had a big stock of existing units closer to the city, but it's always a challenge for Sydney to meet its stock aspirations. And I suppose construction costs, I imagine, are a barrier to that in terms of that there's a clear aspiration at a government level to see more high density stock. The new metro lines offer a clear pathway to better transport connections. So there's a lot of logic there, but I suppose construction costs are a barrier. So I imagine there's sort of a lot of pent up demand at the moment to proceed, but cost issues mean feasibility is still challenged. Would that be right?
Yeah, correct. So previously you do your feasibility 2 or 3 years out before you probably start turning soil. In a rapidly changing cost environment, suddenly something was feasible is now no longer feasible. And, you're definitely seeing that, typically you'd be targeting double-digit IRRs. A lot of those over the last year or two whilst you're in approvals, suddenly you're down to single digits. It's a very different equation. There's reported price rises coming on some things like stormwater pipes, 25 to 35%, later this year in 2026. If that happens, that just has flow-on effects. We've got the petrol crisis at the moment, which will probably just add to, subcontractor quotations. Who knows where the cost will end up in the next 6 to 12 months. But again, that rapidly changes the development feasibilities. And by the time you actually start building something, may no longer be feasible at all.
So on those costs, that's a topical issue. So we might as well just touch on that while we're at it. And we're recording this on the 26th of March, and we've seen a big increase in fuel costs, and that immediately plays through to transport costs. But oil's an important input to other factors of production as well, and construction materials, oil, PVC, ammonia, other. I'm not a scientist, but many other byproducts of the oil refinery process are linked to construction materials. So, what are you hearing in terms of cost increases over the past couple of weeks?
Look, like I said, a lot of the stormwater pipes for stormwater, sewer, even the water supply pipes, within the actual developments. Typically, if it's PEX or whatever it is, rumours are anywhere from 25 to 35% will be this year's price increase. Now, a lot of the developers and the contractors doing these projects are on fixed price contracts. So to absorb a 25, 30% uplift in pricing on typically something might be 5 to 8% of your construction cost, if you're down to between 5 and 10% margin, suddenly that margin has evaporated just on that one trade package alone. So, it will flow through to other things. Obviously, the oil has transport, stuff's got to be delivered. Delivery charges will have surcharges. That will affect everything from concrete supplies, steel supplies. No one knows where it's going to go, I suppose, at the end of the day, but it's definitely going to put upward pressure on construction costs.
No one knows where it's going to go, and it's, I suppose that's the latest iteration of something that's become, unfortunately, a theme for a few years. We've been seeing these increases in material costs. I suppose we were thinking it might have settled down, but it's reared its ugly head again. Is it resulting in changes in procurement and the way people look at this? Are they sort of trying to hedge costs ahead of time to mitigate risk? Is it changing the way developers look at procurement?
It is a little bit, in saying that developers often have a procurement plan and they go out to market well before they actually get to physical site. So a lot of those costs are priced 6-8 months ago. There's not always mechanisms in contracts to adjust for that. And again, even sort of downstream of that, where a developer is selling, say, an apartment to a mum and dad or somebody, in 2 years' time it'll be built. There are sunset clauses in development deeds. If costs fluctuate too far, they can withdraw that, put it back on the market. There have been cases where whole developments have been pre-sold. By the time it actually goes through construction, this is more sort of post-COVID when we came out of that sort of scenario, that they activate the sunset clauses, and if you want to buy the same apartment back again, that's another 10, 20% on what you'd actually paid your deposit for 3-4 years ago.
Yeah, well, that's right. We'd seen that issues with fixed price contracting, and coming out of the pandemic, the insolvencies data that ASIC was reporting, it returned to normal, and then went somewhat above where we were pre-pandemic, and within that, there was a lot of builders and development businesses intrinsically linked to the residential supply, and there was a lot of insolvencies in that sector. So there's been, it's challenging then at the same time, I suppose, to sort of manage that and roll out new supply at the same time. So I imagine a lot of those issues are sort of common across the board, but then pricing in terms of, and coming back to what we were discussing earlier, the pricing in terms of what's achievable in final sale values isn't common across the board, because it's sort of linked to location and how far we are from the city, and I've heard talk within Sydney of an east versus west sort of divide in terms of feasibility. I mean, do you think that's a crude generalisation, if you like, but do you sense there's sort of truth in that in terms of where we're seeing stock come forward versus where we aren't?
Definitely. And there is that imaginary line that sort of goes at a 30-degree angle between east and west. Again, it depends on the actual developer. So there's more sort of what I call traditional long-term established developers that aren't probably leveraged as much as some of the newer developers that have done one or two recent developments and made a good return. So they suddenly become, hey, we're going to do something bigger and larger. That will still play ahead going forward. And that on insolvency piece too, you mentioned, that hasn't sort of transpired into the market as yet. That probably will be coming at some point. Will it be better or worse than when COVID, there's 1,000 builders a year going under? I suppose we've still got to wait and see where that's going to go, but that will probably start rearing its head over the next 6, 12, 18 months as we sort of go through this cycle again like we did in COVID, where costs are going through the roof, fixed price contracts, it's not worth almost developing in some senses. But then again, we've got that housing shortage where the government's trying to push for these developments to go ahead, but they suddenly become unfeasible. Suddenly you're paying $2-3 million for an apartment that, 2 years ago might have been 30-40% less.
And where are land values in all of this? So you'd think that if costs are rising and sale values aren't increasing at the same rate, then to the extent a valuer would look at land value as being a residual and should in theory fall. I mean, are they falling or how are they reacting? I'm
not a valuer, but in saying that they're definitely not falling. They may not be increasing as quick as they were 5 or 10 years ago, but there's still value in owning land. And again, depending where you own in Sydney, say east versus west, very different sort of equations. I don't think, again, and economists will forecast this, I don't think Sydney will ever necessarily go backwards when you look at it quarter on quarter, year on year. You might have a bad quarter, but it'll probably make up more so even the next quarter. And that's just, historical patterns, looking at trends over the last 10, 20 years sort of thing. That will probably keep going even if costs go up.
Yep, it can be tough to square the circle, but I think the long-term upward trend in land values, people have seen that, and to some extent I think it feels like they're sort of prepared to ride through the cycle. So even if it's not feasible to proceed with large-scale development now, they're prepared to take a long-term view, that it will be, and they're just prepared to sit on that land in the meantime.
Yeah, lots of land gets optioned all over Sydney, for minimal cost, subject to approval and consents. You can keep rolling those options over for minimal cost in the scheme of things.
Yeah, I mean, coming back to, I suppose, to the bigger picture, so there's different pathways, as we've talked about, being pursued. Perhaps in closing, I mean, where do you think we'll be in a few years' time, both in terms of the policy framework and perhaps the relative success? Where do you think in terms of some of those initiatives, be it industrial rezoning, the accelerated planning pathways, and of course the TOD? I mean, the metro's getting closer as every year goes by, but which of those do you think will be, all of those still be as relevant as they are today in 5 years' time? Which do you think will make the biggest contribution?
Look, I think they'll all still be relevant. Obviously, the infrastructure piece will hopefully be near completion. I mean, it's been going for 10, 12 years already since they started tunnelling all over Sydney.
I'm sure there's more to come.
I'm sure there will be. I think ultimately, at the end of the day, it'll really depend, I suppose. The planning is gotten better. It's not perfect by any means, whether you look at state or local. I think that will always be tweaked as things go through. I'm not for local or for state. I think it's got to be a balance between both of them to get the right product, what the market and the community needs at the end of the day. So I think there will be adjustments made to that. TOD's still relatively new. I know they have already made one sort of adjustment around the radius of where you can develop, how high, what the FSR is. That has been adjusted once already. In saying that, it's probably still not perfect. So I think as, developers, the community, everybody matures and goes through this process, it will still be adjusted as we go forward to ultimately, hopefully, give us a product at the end of the day, but it may not be the same form as it was 2 or 3 years ago or it is today.
No, we'll have to continue to see adaptation as market demand evolves, but that's, of course, part of life. That's what we'd expect. I think we are in for a period of catch-up. It might not, given the current pressures on cost and higher interest rates, it may not be this year, but certainly pent-up demand to see an acceleration in new supply once a couple of those levers shift, whether it's cost pressures calming down or potentially shifting back to lower rates next year. But we'll have to wait and see. Thank you, Mark, for your insights. I'm sure our listeners found that really interesting. So thanks again for your time.
Yep, perfect. Thanks, Ben.